Yes, the reason you clicked on this video is true. I really made over $10,000 trading fair value gaps and premium and discount. You can do the exact same thing. You don't need a course and you don't need Twitter. Simple ICT concepts are all you need. If you want to learn how, stick around till the end of the video and I will explain how. If you do enjoy, please do drop a like, and without wasting any time, let's get into this. So if you are familiar with ICT concepts, you will know that there are many concepts that are used and float around YouTube and Twitter. What you don't know is that you only need 3 or 4 of these concepts for your trading to be profitable and for you to make money like I did in this trade breakdown. Now, what I want to emphasize here with this breakdown is the use of only 2 concepts. Yes, that is correct. I will be using 2 concepts with this. Now, the very first concept we will be using and going over is premium and discount. The idea of a low that took out sell side liquidity and a high that took out buy side liquidity. What we can do is measure this range like I have done here. So you can see this low represented by the wick here took out sell side liquidity below all of these lows. Now there are willing sellers below these lows, and then a high that ran up and took out buy side liquidity here and all of this buy side liquidity. Once we do wick away and start to trade lower, this becomes our range. So we measure this low all the way up to this high. Then we take our 50% level. Above 50% is considered a premium, and that is where we want to be looking for shorts. Below 50% is considered a discount. Now, I was bullish on AUDJPY, and let me show you why. We had a leg up. We traded back down into the range. Remember, the range is defined as the low that took sell side, the high that took buy side. Traded back into a discount of the range, and look what we trade into here. A familiar 3 candle pattern should show up. You can see we traded into what? A fair value gap. Now this fair value gap is an important fair value gap. Why is it important? Well, because we ran away from it quickly, so there's displacement in this, and it was birthed after taking sell side liquidity out of the market. Now these fair value gaps are the ones you want to be looking for. A lot of you trade random fair value gaps that are not high probability like this one. It is also paired with a down close candle. Here the big bold down close candle is our order block. So we have a fair value gap that took out liquidity, had an order block, and had strong displacement. Okay, so this is our high probability fair value gap in a discount of this range. Okay, that's the framework I'm working with, and I made over $10,000 just using simple framework like this. 2 concepts. Okay, so let's drop down now. Let's drop down into the 4 hour. You can see we wick in and then we start to trade away from the fair value gap. Now during this week I was looking at other pairs, but then in my weekly analysis, which I do on Sundays, I saw that AUDJPY looks like it wants to expand where? Towards this high. Okay, buy side liquidity rests above this high, and we have a long wick which we can measure and take 50%, and that can be another target. Okay, so weekly open Sunday 5 p.m. New York time. Remember, everything is always done in New York time. So when we opened up, if I zoom in inside here, remember I only want to use premium and discount and fair value gaps. Okay, so you can see down here we are trading from this discount. So all of this up here, we don't want to see big pullbacks. For example, when we get a leg up like this, we don't want to see a big drop down into these down close candles and then move higher. We don't want to see that because we've already had a big drop down and now we are expanding towards a target. We want to get towards that target quickly. Okay, so what we would prefer to see is something like an expansion, a small retracement, and then a move higher, which you can see we got already here. We got a retracement into what? Into this 3 candle formation, a fair value gap. And remember, we are still using premium and discount, just of a bigger range. We are expanding. I don't expect us to trade all the way down here. because we are in a rush to get towards this target. Okay, so look where we opened up. This here is our weekly opening price. Now we want to be buyers below the weekly opening price or around it. Okay, we take this range from the low and flip it and move it up, and that is our dynamic discount. So within this sort of range here is a discount because we are expanding. Remember, don't forget that. That's a key bit. So you can see 5 p.m. New York, we open up. Let me make this an open color. Now we open up and we drop below, which is what? Our Judas swing. Now I anticipated a Judas swing. Why did I anticipate a Judas swing? Because we always want to induce sellers into the market when we're bullish. Dropping down below all of this liquidity inside here, you can see we have multiple 4-hour lows in here. So on the 15-minute, that is going to look like this. That looks like accumulation. We have the manipulation, which is exactly what I wanted to catch. And then we have the distribution. The power of 3, accumulation, manipulation, distribution. So on the 4-hour chart, remember it looks like this. I wanted to be a buyer below this opening price. And you can see here, look what we trade into. We trade into, remember, a fair value gap. This is all we use in premium and discount, which is also represented in the form of opening prices. That is important. Premium, discount, and fair value gaps. You can see we built up sell side liquidity in this accumulation phase, and we have a fair value gap right below this accumulation. So think about what we want to do here. We are bullish on our buyers, okay? And we have a lot of sell side liquidity above a bullish fair value gap. A bullish fair value gap which created displacement. Look how quick that move up is on the 4-hour. We then engineer sell side liquidity. So we have created sell side liquidity simply for the purpose of taking it and then going higher. You can see all of these lows, and on the 15 or the 30-minute, you can see clearly a depiction of the power of 3, and we have that 4-hour fair value gap right below it. I had a buy limit, set at this fair value gap. That same 4-hour fair value gap, I had a buy limit there, and then I aimed for, remember this wick here, this is the 50% level, I aimed for the 50% level here, and I had my stop loss below the body of this down close candle. Okay, you can see that is a 1 to 4 when we drag it out. And what does price do as we start to move away? Price drops back down to the weekly opening price, remember, and this is on a Wednesday. Price comes down to the weekly opening price. If I move this out your way, you can see what is also inside here. Remember, we traded up, traded into a fair value gap, and traded away again. What is left behind? Remember, we take our range from low to high. Below 50%, we want to be buyer. Which PD array inside here is clean and obvious to you? To me, it's either this fair value gap or this fair value gap. For the case of the video, we will use this, and you can see we trade up, run back down, retrace, and then pump higher to take out the buy side liquidity and 50% of this long wick up here. And that, people, is the power of premium and discount and fair value gaps. When I say you do not need anything more than that, I'm serious. A lot of people think I'm joking when I say that, or a lot of my private students and public students, they let it go over their head, okay? I am serious when I say that. This is all you need. We use opening prices as well as a dynamic premium and discount. So you can see all throughout this move, once we've determined a bias, okay, from this range, we trade back into what? Remember, we traded into this daily fair value gap, rejected away. Now we want to expand towards a high. So we drop down time frames and we're looking for expansion. So we want to see strong moves up, retracements into fair value gaps. Remember, we don't always have to come all the way down because we have already traded into a higher time frame fair value gap. So now we just move up, trade back into a gap, move up, trade back into a gap, move up, trade back into a gap, move up. Remember, it is the exact same thing repeated over and over again. You can see it. There's 4 examples in this one price leg. We move up, gap, move up, gap, move up, gap. And the gaps we want to use, the high probability gaps, are the ones that are created by candles like this. Okay, look at this momentum here. Okay, that's what I want to point out. This candle, 37.8 pips, so a 40 pip candle this is, and that's a lot of displacement. Okay, when we have displacement like that and we start to consolidate, expect us to retrace into the gap, sweep all of this sell side liquidity up, and then move higher. On the 1 hour, you can visualize it better. The exact same thing happens here. Remember, this is our 4 hour fair value gap. We have a range and we have sell side liquidity below these. Look how many wicks we have here and how many bodies we have all aligned. This is a tight consolidation. People are trying to sell here, and buyers, new buyers, early buyers are also buying from this. Where would their stop loss go? Below here, below this big wick, for example. Okay, now we retrace, get a leg up into a fair value gap, trade lower, take out all of this and absorb this sell side liquidity, and then we trade into, remember, the weekly opening price and our fair value gap. Trade higher, trade lower, trade higher. And it is the exact same process repeated on every time frame. You could drop into a 15-minute time frame and see the exact same thing happen. So with that being said, I hope you did take something from this video, and I hope you took something that there is beauty in the simplicity when applying these concepts. So if you did enjoy the video, please do drop a like, please drop a comment, and check out my socials in the description. You will learn a lot over there, and it is my sort of place to communicate with you guys. So as always, thank you for watching. I'm very appreciative of all the support lately, and I will see you in the next video. Enjoy.